The Federal Reserve is holding its first meeting of 2026 tonight, and that's our focus this evening on Profit 360. Experts expect the Fed to keep interest rates unchanged at 3.5% to 3.75%. This pause shows the Fed is staying in a wait and watch mode. Inflation, measured by PCE, that stands for Personal Consumption Expenditure, is at 2.8%, still above the 2% target, while job growth remains rather soft. Now, these factors give little reason for immediate rate changes right now. The meeting comes under pressure from the Trump administration, which wants faster rate cuts. Markets are closely watching for any hints about when future cuts might start. Many expect the Fed to hold off until around June of 2026. Also, what makes, in fact, tonight stand out is the fact that this is one of the last 3 FOMC meetings before Chair Jerome Powell's term ends in May 2026. Some experts think the Fed may pause cuts until then, possibly leaving big decisions to the next chair. But for now, what would a status quo mean? We have Naeem Aslam, CIO at Zay Capital Markets, joining us to help us make sense of what the consequences of both a rate cut and status quo would mean. Mr. Aslam, thank you so much for giving us your time. Let's begin with the most upfront question. What, according to you, would be the result of a status quo on the Wall Street, since the chances of that is higher?
So, thank you, Malika, for having me. Look, I think there are 2 spectrums to speak about this one. Number 1 is the political arena, and number 2 is the stock market, which you alluded to. Stock market is looking at, okay, the status quo is there's no change in the interest rate. Everything is going to remain same, but everything is cooking under the hood. How do we simplify that? Meaning what the Federal Reserve commentary is going to say, what they are going to project for the remaining term of Jerome Powell as part of the collective stance or their view. That is one. And then the other one is, of course, that political arena, which I've discussed. And that means that, okay, what Donald Trump, the president of the United States, is going to say about both angles. Number 1, the interest rate decision, i.e. no change. Number 2 is, of course, that what the Federal Reserve will say. Now, let's boil this one down. Let's peel a little bit more layers off and then understand what that statement could actually look like, which could change or keep the status quo as it is. If they mention their independence, and if they continue to state economic data as the key point, then we don't expect, because what the Federal Reserve would be saying is that, look, we need more time now to see and digest what we have done. And then let's see what the reaction is going to be. If they show, if any of the words, even a single word, shows that there is this political tension, political pressure, which you have alluded to earlier, then that is going to be a very different, no matter what the statement is going to be, Wall Street is going to understand one thing and one thing alone. And that means that we are not done yet, even though the odds of another rate cut are at a minimal to none, but there will be another rate cut. And what is that going to do? That is going to create a huge amount of volatility in 2 major spaces. Of course, your assets like gold and silver, and number 2 is your stock market, which I'm sure that you will have plenty of questions to ask me on.
Right, Mr. Aslam. Actually, that easily segues to the next point that I was trying to make. How would you describe America's economic health at this given point when inflation is just above their 2% target and job growth remains moderate? And if the situation were to continue, how do you think the Fed's rate cut trajectory is poised to be, at least until Powell is at the helm of it?
Look, I think the Federal Reserve before were never used to of the political circus. They just were using what the economy is doing, what the data is coming, and then they used to say everyone is going to trust what the data numbers are, and we can make a decision on back of that. Now we're looking at new world order, i.e. what economic data comes out, It remains a question if the person who's producing that data will remain in position, or if the White House officials, they will accept that data as a normal number, or whether they will just classify that as noise. So Federal Reserve has to deal with a lot of that particular circus. And secondly, and more importantly, tariff weapons, which have been enormously used, and to a larger extent, a lot of mockery now has been made out of those particular tariff weapons. That is another totally different ballgame for the Federal Reserve to look at it, because they never used to think of, okay, tariff could be used as a weapon to instigate some of their own policies or how America is seen. Because look at what happened yesterday. The deal between EU and India. I mean, that is a phenomenal deal in two terms. Number one, it shows you there's a desperation to move away from the current partners. And number two, there's an urgency to do it now in order to stop the further reaction. So if I am the head of a Federal Reserve and I'm looking at these particular angles and I'm looking at them, I'm also paying attention to these particular factors as well. Okay, now Europe, in terms of our trade deals with them, that is also going to have an impact on our economic growth, on our economic numbers, on our economic data. So we need to be mindful of that, because Federal Reserve doesn't just look at one data point or one particular data set from one particular month and make a decision. For them, the decision needs to be used with the lens which has a foresight, and then they can decide based on that one.
Aslam, I'm actually going to leave that point to our viewers to take note of, because you mentioned it quite thoughtfully, that yesterday India and EU made an extremely important deal. It's one of the biggest free trade agreements that India has made, and that's why, as Prime Minister Narendra Modi described, it's comprehensive, it is strategic, it is also very, very historic. And I do not know if it is a mere coincidence that the ambassador, Sergio Gore, posted on X talking about the defense pact that India has with the US. And that's up to our viewers to think and relate. But my next question to you would be, one can't speak about the Fed and not mention the question rising on its autonomy that you alluded to, with Trump repeatedly jolting for rate cuts. Once the chapter changes from Powell to whoever his successor is to come, what's your reading on the factors or the parameters that the FOMC considers to decide the rates? Will something dramatically change, especially in the economic indicators that you were mentioning before?
I would say that we are going to see a new order in relation to how the parameters are defined and how they are perceived and how they are allocated in terms of the Federal Reserve's weighting of the decision in terms of how many rate cuts they see it, and then what is the future projection of the dot plots will tell us. So I think the future person is going to be a handpicked, and that just says everything. That yes, from the outset, you can say the Federal Reserve is very much autonomous and they have the full autonomy of doing whatever they like in relation to the federal decision. But the person has been handpicked to do one job and one job alone, and that is to bring back two things. Number one, bring back dovish monetary policy back in, which the stock market absolutely love. And number two is, of course, lower the interest rate to a level where the president seeks it more permissible. And I think that is what we are going to see. And I think this is the reason that we are experiencing a huge amount of a rally that we have never witnessed, at least not in my career, when it comes to silver, which is not even classified as a secondary backup, but now it has coined itself as the secondary most favorable asset.
Got it. Mr. Aslam, sorry to cut you off over there because I'm losing time. I just have 30 seconds left. I really need to ask you. Lastly, the recent rally of gold and silver have been associated with Fed's rate cut decision too. Could you explain the relation and give us a sense into the near future on the same, especially with these two metals and Fed rate cuts, if they were to come very quickly?
Yeah, I think that the path of least resistance remains skewed to the upside for both of them. So we continue to remain immensely bullish for both of them in the light of what is about to come, and that is lower interest rate and dovish monetary policy.
Much, Mr. Aslam, for giving us your views. Of course, my big takeaways are that you would continue watching Fed's commentary and the projection for Powell's remaining term. Especially, he's also pointed out skepticism around Fed's autonomy, especially after Powell says his goodbye in June of 2026. Until then, the Fed could and be in the wait and watch mode. But